on for season 5 demo day of Blockchain Founders Group. I'm very happy that for the fifth cohort of our acceleration programs, we have had over 300 applications. We did over 100 interviews, and we are very proud to present you some of the top startups in this cohort. I guess we made all the startups sweat a lot during the last couple of months. But ultimately, we hope that we help them grow, and we help them maybe do their first, close their first clients, make their first MVP, uh, make the first revenue, and grow social media, and maybe also make the first hires. So I guess I have nothing but the biggest respect to all of the founders in this current cohort who have made it this far. So really chapeau to you guys. And I'm also very happy to show the audience the results of what everyone has been working on. So let me go quickly through the agenda. So there's going to be a quick intro, then we will switch right to the startup pitches, and then there's going to be some closing remarks, and then we will conclude this demo day. Who am I? Who is the team? So my name is John. I'm the head of portfolio and corporate development. So I do everything from sourcing, selection, due diligence, and contracting. Besides that, I'm also an active angel investor, and I also engage in airdrop hunting when I have time. Melissa, you want to say a few words about you?
Sure. Hi, everyone. I'm Melissa. I'm the head of ecosystem at Blockchain Founders Group. So, what I do is I bring together partnerships that would help the teams and support them in the journey after the program. So, I also do marketing. And we organize events like this for the startups to participate in. Thanks, Yong-Chan.
Mhm. Thank you. All right. So let me say a few words about Blockchain Founders Group. So what do we actually do? So we are a Germany-based accelerator. We focus on super early stage startups, typically at pre-seed stage, right before maybe finalizing the MVP, right before making the first clients and getting the first revenue. Typically, we invest around 100K USD per deal. We have a very strong focus on Web3 or maybe Web 2.5. So everything that has any sort of touch points with blockchain technology, DLTs, is of potential interest for us. So it could be DeFi related infrastructure, oracles, on-chain analytics, NFTs even, Bitcoin-Fi. So these sort of verticals are, yeah, part of our focus areas. So far, we have backed more than 20 startups. We have a very global focus, so we don't discriminate. So you can be based in India, Singapore, the US, Latin America, Africa, anywhere. As long as the team, the market is promising, you have a chance of being part of Blockchain Founders Group. Historically, we had a focus on equity deals. Recently, we pivoted a little bit. So we do also now token investments. So if you plan to issue a token, you're very welcome to apply at Blockchain Founders Group. Everything would not have been possible without our great team. So shout out to our managing director, Sarah, who is based in Germany. Then we have Max, who is a dear friend of mine based in Seoul. So we both are actually based in Seoul. Then you've heard and seen Melissa just now. She's based in Singapore. And we have a high caliber board of directors with a background in regulation, serial entrepreneurship, and also venture capital. So I'm very honored that we have two seasoned tech experts joining us today as judges. So we have Yaroslav from YardHub and then also Martijn from Techstars. I guess it would be best for both of them to make a quick introduction of themselves. And let's say we start with Yaroslav.
Hey everyone, thanks for having me. Kudos to startups for making it to demo day. So I'm Yaro. I'm from YardHub. We are Web3 venture studio and accelerator. I would say we're like the fellow accelerator. For BFG, we also work with Web3 startups. We invest actively. We mainly focus right now on DeFi and Gamblify, but also Web3 agnostic. Me, myself, I'm a regular keynote speaker on Web3 conferences, startup mentor, startup advisor, hackathon judge, demo day judge. Love working with early stage startups, helping founders. And yeah, looking forward to today's demo day, and good luck for everyone pitching.
All right, I can go next. Thanks for the opportunity to be the judge again. So my name is Martijn Sieland, working for ABN AMRO Digital Assets, where I lead the tokenization efforts. And within ABN AMRO, we have a Techstars program where we also have an accelerator. We have the 4th cohort this year. Looking forward to your presentations, and indeed congrats on that you made it to the final round if I hear 300 applications. So looking forward to hear your pitches and ask some questions. And yeah, nice event. Thanks.
Thank you. All right, so we have 9 startups in the pipeline today. You will get to know each of them one by one. Every startup has 6 minutes max to pitch, followed by 5 minutes of Q&A from the judges and also from the audience. So if you have any questions, just shoot the questions here in the chat or on YouTube. We have a couple of judging criteria. So one is market potential. So how big is the market? Does it make sense to fund the startup from a venture capital perspective? Is there any sort of technical innovation? Is the technical implementation feasible at all? Then thirdly, the business model. So is there a fit between the revenue model and what the startup is trying to build? And then fourth, which is also very important, the founding team. So is there some kind of like founder market fit? Did the founders have previous experiences in building in this sector that they've chosen? So I guess these are some of the guidelines we are looking at primarily for today. So without further ado, let's kick it off with the very first pitch. It's going to be Domino. So Vince and Peter, feel free to turn on your cameras and share your screen.
Hey everyone, let me pull up the keynote. Right, so you should be able to see everything. I'm Vince, the co-founder of Domino, and we are doing easy workflow automation for Web3. Right now, automating Web3 is hard. Everybody is dependent on developer if they want to automate any of their team workflows. Web2 automation giants like Zapier are blindsiding the Web3 niche. Why? Because Web3 is 2 underlying technologies, on and off-chain apps. Having off-chain apps only does no good. What are teams doing right now? Mostly they're doing their workflows manually. In the worst cases, I see entire moderator teams doing a single workflow, checking for Discord reaction, assigning airdrop points on Zili. Automating Web3 with Domino becomes easy. We have a no-code automation platform that lets any team member automate their workflows across the Web3 apps they use. This happens with a simple, if this happens, then do that logic across apps. So for example, if yield hits 15% to Uniswap, then send me a DM. The number of Web3 users is growing, and the number of Web3 apps is also multiplying. And with this, the need for easy automation grows. In the early days of Web2, we saw an explosion of web tools. Web3 is similar today with dozens of new apps popping up every day. Essentially, what we're seeing is a SaaSification of Web3. What can you automate with Domino? A bunch of workflows. So for example, mobile notification, community quest platforms like Zili and Galaxy, business development workflows on DeFi Llama, CoinGecko, DAO workflows, cross-channel announcement on Firecaster, Telegram, Discord, Twitter, and so on and so forth. We have a drag and drop automation builder. We have over 1,400 automations already built. You can simply pick and connect the app blocks to automate your workflows, and you can share the automation with your teammate or publish them to make it available to everyone on the Domino Explore page. We have the Domino App Store where users can browse the integrated apps. Each app comes with its own triggers and actions. These can be used in the automation. We work together closely with the app teams that we integrate in order to make sure that the automations we build for them on launch are very useful. What can you automate with Domino? We have use cases by popularity. Our biggest one right now is Quest review and Quest launch automations on Zeely and Galaxy, but we can do all these other things on across various apps. We have the Domino Partner Program. When an app integrates into Domino, users can connect it to tens, soon hundreds of Web3 apps. Integrating is free for the app owner team. The users pay the cost basically, and the devs can co-market the integration with us. Customers are finding us through our integrations. When we integrate a platform, we co-market to their users. So for example, Zeely has one of the largest Quest platforms has us in their onboarding email and documentation. We also generate SEO-focused landing pages for each app and template that we integrate. What are our competitors? Our main competitors are Boto.io, Espresso, and Mimic Finance. They offer less than 20 integrated apps each. They are not leveraging the growth through integration that is fueling our growth and that is proven in the Web2 niche. And all of them are focusing on transaction and notification automations and are really blindsiding the wider workflow automation market. Our pricing model is subscriptions. Right now, we are doing 364 USD per month recurring per user. And based on Alchemy and CoinGecko data, there are 50,000 Web3 companies in our first niche only, which is Quest review automations. There are around 5,000 companies. If we convert these 10% of these, we are looking at 182K MRR. Our traction is very good. We are growing MRR rapidly. We have 2,700 USD in MRR and growing. We have 140 signups and growing. We have over 260 total active automations, which is also growing kind of exponentially. Over 700,000 automations are being run by our paying clients per week and growing. Our MRR projection based on our past growth and past experience, aggressive but realistic, 10K USD by September, 25K USD by December, and around 100K by the end of next year. Our ask is 300,000 USD for 10% equity plus a simple agreement for future tokens. Eventual token distribution ratio will be on a one-on-one basis. And this investment will fund a 2-week runway. Now, important, we already have the MVP done, so we don't have to build the product, and 100K MRR in 18 months. And our first 150 integrations. About the team, we have been in real life friends with Peter for 10 years, and we have been building and scaling B2B SaaS for the last 7 years. Our SaaS businesses have served over 2 million users, and we have generated over 2 million USD in revenue across our SaaS businesses. And we are only focusing on Domino right now. And that's basically it. I'm happy to answer any questions.
Thanks so much, Vince. I will just open the time for our judges to ask questions.
Thank you. Thank you, Vince, for a very, very good pitch, very interesting project. You said that the service is free for devs, but users paying. By users, you meaning the startups that are using this, right?
Yes, so we integrate the B2B apps, and the teams that use those B2B apps in Web3 are our paying users, basically. So let's say we integrate Zeely, and all the community, all the users that use Zeely on a daily basis are basically our paying users in the end.
You mean users that are using Zeely, the Web3 startups that are using Zeely for their quests, right?
Exactly.
And you also said that so like quest management is currently a primary use case. And what is like the average lifetime for this kind of users? Because quests, like I know that some projects are running them nonstop, but for many projects it's only like the GDM part and then they drop it.
Yes, so we see basically there's two scenarios. One is campaigns running from 3 to 6 months, and the other one is just running concurrent campaigns basically forever, for the lifetime of the company. But we see a market shift of teams moving into that second segment, because once they launch a token, if they're not incentivizing anything, the community dies.
And what's your experience? Have you tried, motivating these paying customers to use your product for some more like use cases, except
Yes, we don't need to motivate.
What's the success with that?
We don't even need to motivate. They come to us with that. So they are doing cross-channel announcements. They are doing automations on Discord directly. So they are building custom logic, connecting their Discord. Let's say, submit this activity, that activity, and we submit that to Google Sheets. They are basically building on top of the B2B apps they're using. So for example, let's say a team is using an app that doesn't allow them to log certain actions that their users are doing, and they are logging it to an Excel sheet just quite simply. And essentially, once we start with the first use case for a team, they basically come to us and say, hey, we're doing this as well, that as well. Community support tickets are filling up and we don't have the channels available in Discord. Could you offload those to Google Sheets automatically when there are more than 20 tickets open? So basically, they are coming up with the use cases and not even us.
Okay, thank you.
Thanks for the nice pitch. Can you elaborate a bit on the tech behind? Because it looks to me that's quite scalable. Because otherwise you're not able to connect with all those dApps. But how did you work that out?
Maybe this is a question for Peter.
Yeah. What do you mean by the tech?
Yeah, so you have kind of a current setup that you can serve many different companies with the same solution.
Yeah, so we have a core product that's independent of any integrations. And just like with Zapier, we are creating, basically integrations are in the future will be user-generated content. So anyone can come and connect their API and the integration is live. So we built a modular UI for this. We built developer tools for this. And basically, I'm doing this right now, but in the future, users will be able to create the integrations. And on the tech side, it's basically JavaScript right now.
Mm-hmm.
It's horizontal, it's scalable horizontally because we can just launch new servers to. Okay. Yeah, the core product is quite simple, I think.
All right, thank you.
Thanks so much for that. Yaroslav, any more questions?
No.
All right, awesome. Thanks so much, Vince and Peter.
Yes,
We'll now move on to the next team, Yoki Finance. Constantine, are you ready?
Yep. Can you hear me?
Yeah. So yeah, you can go ahead and share your screen and start when you're ready.
Can you see my screen currently?
Yeah.
You see the deck?
Yeah.
Awesome. Hello, everyone. My name is Konstantin, and I'm the founder of Yoki Finance, the Web3 subscription payment gateway. Today, I'm excited to showcase the future of the crypto subscription economy with you. The problem we address is critical. Crypto payments are becoming increasingly popular, yet their use case is limited to one-time payments. Subscription payments, one of the key drivers of the Web2 growth, are not available in crypto. Better say were not available before Yoki. So merchants are losing funds and time. Blockchain infrastructure, decentralized name systems, social fi, data analytics, research, security, accounting, and many, many more. There is constantly growing amount of verticals with subscription business model where crypto is native or preferred payment method. We have done research and our initial target market of these 6 industries mentioned here exceeds 36 billion, not mentioning the communities, VPN, hostings, and other industries where crypto is traditionally the preferred payment method. To satisfy the market need, we have created a permissionless protocol. Our solution enables anyone with Web3 wallet to create and manage unstoppable subscription contracts. The settlement through these contracts is done directly between merchants and the customers, so there are no counterparty risks. The secret sauce is using account abstraction that helps automate the payment process with single approval provided by the user. We have also built the connector to Stripe that helps Stripe customers to get onboarded to Yoki and accept subscription payments in crypto seamlessly. Let me demonstrate how it works. So we are on the website of a demonstrational merchant with different pricings. User is clicking the upgrade button and is on the checkout page. User is connecting the wallet, choosing the chain, and we support Arbitrum, Polygon, and Optimism. Connecting the wallet, we support any Web3 wallets, cold wallets, browser extensions, applications. Specifying the email address and selecting the token with which the payment will take place. Currently it's USDC and USDT as the most popular stablecoins, but we could support any ERC20 asset. Once the transaction is settled on chain, merchant receives the callback notification about the payment, and user receives the access to the platform. We already launched. We have 7 live integration, including Cointelegraph Markets Pro, the biggest crypto media in the space, and CoinStats, one of the biggest portfolio trackers. We have partnered with 3 major crypto payment gateways, including CoinSpay, the biggest crypto payment gateway in the world in terms of the volume. Last year, they processed $3.7 billion. We are accelerated by Odyssey and Blockchain Founders Group. And we have won multiple hackathons and secured more than 100 worth of grants from Optimism, ICP, and Gitcoin, being in the top 10 of the recent Gitcoin round by the amount of backers and the funds that we got. Our model is straightforward. We charge the fixed fee on top of all the transaction, and by having the subscription model, we have the stickiness and forecastable nature of the revenue inherited from our merchants. The competition exists, and we are unique in multiple ways. We are the only solution for traditional recurring payments, which is non-custodial and permissionless, and we are unique in our go-to-market strategy. We have multiple strategies, which include creating educational content, such as hosting the Crypto Subscription podcast, direct B2B sales, and loyalty points distribution. But our primary strategy is through the white label integration into major payment gateways. To achieve maximum adoption for our technology, we are leveraging their already existing base of merchants on a white label basis. So they are offering our product to their customers, and they receive a share of the revenue. Our next steps include the launch of the self-service platform where anyone with a Web3 wallet will be able to create the account and corresponding contracts to accept subscription payments, integration with payment gateways, the launch of the service, which will allow paying for almost any mainstream streaming services like Netflix, Spotify, Amazon Prime, etc. with crypto. We are currently raising our pre-seed round with 1,050,000 with a safe plus token warrant. The raised amount will be enough for 18-month runaway with a small reserve for us. The post-money valuation is at 7 million, and one of the main drivers of the growth for us will be our token. The token will be distributed through the loyalty points system, which drives gamification and merchants onboarding through the mechanism previously used by Blast. So we distribute points to the most active merchants, and they have an opportunity to distribute that points to their end customers. Token will be also used to pay for the promotion in our marketplace, used in the revenue share, and play crucial role in governments. It will have a deflationary model after all the supply will be in the circulation. I'm a third-time founder myself. I've been working in crypto since 2018 as marketing director and product owner, and my co-founder Georgie has a strong background in development and a public track record of building Web3 public goods. We have a full-time remote development team. Yeah, 3 seconds. And we have recently a strong addition to our lineup of advisors with Andy Williams, ex-head of small medium business acquisition at PayPal. Thank you so much.
Thanks so much, Konstantin. We'll now move to the Q&A. So you feel free to unmute yourself.
I wanted to give Martin this time the first turn. Okay. Thanks, Konstantin. Thanks for the presentation. If I get it correctly, so when I'm as a user signing for this subscription, I'm technically allowing the DApp to charge me to take some USDC or USDT that I have allowed with my wallet with the transaction, right?
Yeah, that's correct.
And what is the limit? So the tech is that usually when we use, let's say, MetaMask, we give this maximum spend limit. So when I'm signing for a $10 per month subscription, what is the spend limit I'm allowing this DApp to use?
The minimum amount is for 1 period. The requested amount depends on the merchant. So it is customizable. Some merchants, they want an infinite amount of approval asked. Some want it like maybe for 6 periods, for 12 periods. So it's customizable, but the user has all the opportunity to change that in their wallets.
Okay, so let's say if I allow infinite amount to be charged, what is the security mechanism for the, I don't know, like bad merchants not draining my entire balance?
Yeah, so our contracts are immutable, and we have they have built security scan and showed no vulnerabilities. And the only thing they could do is to charge basically from the user address and send the funds to the merchant. But there is an inbuilt timing and inbuilt frequency in the contracts, so they could not charge, more frequently than it is written in the contract.
So it's processed through your smart contracts. They do not interact with my wallet directly. They are all interacting through your smart contracts.
The smart contract is created by our fabric of contracts. It is owned and managed by the merchant, but they are not, the only thing that able to do is basically to cancel that. So they cannot, change frequency or change the payment amount, because the user has already agreed to that.
Okay, and another question is, how do I cancel? Let's say one of the big problems with subscriptions before was that users were unaware of them, and they just like forgot about them, and they're not using the service, but they still like keep getting charged. So what happens if like how do I know that I'm being charged? Is there any kind of notification, or should I just notice some strange transaction in my wallet and then like, okay, I'm subscribed, and how do I cancel the subscription in this?
That's actually a wonderful part about the crypto subscription, is that we are giving the power back to the user, because in order to cancel the subscription, user doesn't have to go to the merchant website. It is just revoking the approval right into the wallet, or using a third party, or using Yoki or at the merchant. So there are more opportunities to do that, and the power is at the user side. So just revoking the approval in the wallet will be enough to cancel the subscription. And for the second part of the question, users are warned in prior about the payments if they provide the email address.
Thank you.
Thanks for the clear pitch and the presentation. Looks great. Can you tell something about the uptake? So you were successful to onboard with Cointelegraph. What is the conversion on the usage of Yoki currently?
We have processed about 7,000 worth of dollars on the payments. At the moment, the conversion rate is not that big, in comparison with traditional payment gateways. And we are implementing multiple measures to increase that, including we are lining up the design of our checkout process to the more traditional, Stripe-like interface. And we're testing that. We also has implemented A/B tests. And one of the things we are building is also having the providing only one approval. So users will have only one request sent to their wallet So this was also, help in the process of increasing the conversion rate.
And we have not that much time left, but maybe one last question is, if I look at your competitors, you also compare yourself with Superfluid, and then you say transaction type there is streaming, and on your side is recurring. What do you mean with that?
The streaming payments, it's very different. It's when the user is charged like every second the payment, and what we do is more traditional recurring payments, like you pay for the services like Netflix, Spotify, so you're charged one time monthly, not every second for that.
Okay, thanks for your answers.
Thank you so much, Martin. Yaroslav.
Thanks so much, Konstantin. So now we'll move on to sorted wallet.
Hello, everybody.
Hello.
All right, hi. So you guys have 6 minutes to pitch with 5 minutes of Q&A. We'll start the timer when you guys start.
All right, let's go. Hello, everyone. Thank you for listening in today. My name is Yuri. With me on the call is my co-founder, Steven. And today I'll talk about financial inclusion in emerging markets with the help of these seemingly old devices. Some of you might have used these back in the days, but my guess is you'd probably be surprised how much they're still being used today and how their market is growing. So most everybody in Web3 talks about financial inclusion, how Web3 can solve that problem, but it's not likely that someone who can't get a bank account will be able to afford a smartphone to download Coinbase or MetaMask. 18% of the world is still unbanked, and 72% globally own a mobile phone, a mobile device. And at the intersection of these, we estimate there's over 600 million people who are unbanked but own a feature phone, not a smartphone. They own a simple non-touchscreen device with keypad and with access to the internet. So to solve financial inclusion, you actually have to go where people need this problem solved. There's 1.3 billion devices worldwide and growing, majority of them in Africa and South Asia, and almost everyone run on one of these operating systems, iOS, Android Go, and Geo. And funnily enough, there are no Web3 wallet solutions available for these devices. So that's why we've built Sorted Wallet. It's the first Web3 wallet for simple phones. In an intuitive interface, we basically offer all the operations you would expect from a normal wallet. So you're able to send, receive, store crypto, but then also some really cool features that are tailored to the market, such as buying and selling crypto via mobile airtime. And of course, with the help of some AI magic, we've integrated a chatbot that allows people to learn to interact with it, learn more about crypto and finance in general. So how's this being used right now? So across different use cases, one that really sticks out that we're looking forward to the most is remittance payments or cross-border payments. A quick example, John lives in the United States, has a shiny new iPhone 15, installed Coinbase a while ago. He buys some USDT and then sends that USDT to his mother in Nigeria. Well, she receives that in her sorted wallet, and she can use that on-chain as a stablecoin hedge. She can do some stake and yield strategies, or she can off-ramp that with one of the partners that we're talking to right now. Among them are MoneyGram and PhoneBank. Our business model is very simple. As a wallet, we take 2% of any incoming, outgoing transaction, but we're also discussing different ways of putting ad space in there. So our community is already really big, and there's a lot of potential there for our partners to be featured directly in the app. Let's talk about some numbers. We've launched last year, we have over 70,000 downloads so far. We are currently present in 64 countries, and average monthly active wallets is around 1,000. So we're growing really fast, and with what we're planning to do next, we think we'll grow even exponentially. We have actually come into agreement with iOS to be listed as an app, as a pre-installed app on their devices in specific markets in Africa, starting from Q4 this year. So we plan to do over 1 million devices coming next year. our vision, midterm vision, is to become the Coinbase for emerging markets. At some point, we will expand to iOS and Android. We know that users do transition from these simple phones to smartphones. And if we can capture them right now, we believe that we can capture a very critical market share in these areas, so Africa and South Asia. And the second tier is the L2 infrastructure we're looking at. So we don't have a token, but we are looking at an L2 infrastructure that would allow people to have native yield and zero gas fees. Our team's been around since 2017. I've worked with Steven on numerous projects before. Steven's background is mostly in legal. He's an entrepreneur. I've been part of the first ERC 721 standard. I'm also a mentor with Techstars Dublin. Shishir and Anastasia come from a fintech background. So we're a well-rounded team to bring this to fruition. And some good news to share today. It's not public yet. You're getting the scoop here. But we're currently undergoing 1.5 seed round by Tether. So they've basically taken the whole round. But we've decided to expand that to additional 200K for any strategic partners, investors that might be interested or can help us grow in these emerging markets. So that's all from me. Thank you so much for your attention. If you have any questions, I'd be happy to take them.
Thanks so much for that.
Thanks for
judges.
For another clear presentation and a nice product. Can you tell us something about the competitors that you see in the landscape?
Steve, would you want to take that?
Yeah, so specifically for iOS, it has an app store, and in the app store there's Facebook, Google Map, etc. But there is no other crypto wallet. So as it stands now, on the feature phones, there are no competitors. The barriers to entry for a potential competitor, they're not insurmountable. But what we've done in being able to get a wallet working on the phones, it was difficult from a technical point of view. So, we feel we're sufficiently insulated, at least in the short term. And then as you move to Android Go, so just for clarity, Android Go is a low-powered version of Android that runs on low RAM phones or low-spec phones. Currently, there's no crypto app at all optimized for Android Go. And let's call it regular crypto apps, take somewhere between 2 and 3 minutes to open, or they just don't open at all, or they crash. So we're not solely without competitors, but they're very few. To answer your question.
And could it be that if you look at where you're focusing on geographically, where those phones are, a lot of M-Pesa is being used, if they are starting to offer crypto?
So M-Pesa is used mostly in East Africa, where we do have users. Our users are spanning East and West Africa and Pakistan, India, and numerous other countries. So M-Pesa, it definitely exists. It's definitely on our radar to see how we can work with it. But it's not our sole focus at the minute, because we're not just focused on, particularly Kenya, where M-Pesa is most popular. So, yeah.
All right, thanks.
Thank you for the pitch. My question is, do you plan to stay only on the side of being a pure wallet, or like adding all the DeFi layer on top of that? So because the markets we're talking about, I would say they are very they love trading, gambling, all that types of stuff. So it seems like it makes a lot of sense to add a layer on top of that.
Yeah, so I suppose just for clarity, we only support stable coins at the moment, stablecoin plus the gas token, and pretty soon we'll have gas paid in stablecoin. So that was a deliberate decision, because this is not about trying to expose people who live in the global south. It's not trying to expose them to anything fishy in crypto. It's more meant to be an access to dollars primarily through US dollar stablecoins. So to answer your question, yes, it's on our roadmap to offer things like staking, some simple trading in the app, but it's not something we believe is kind of the first use case for it, but it is on our roadmap.
Okay, thank you. No, I think they're gonna love buying Pepe.
I'm sure they would.
Yeah.
That's all from my side. Thank you.
All right, awesome. So thanks so
Thanks,
much for
everybody.
that. Yeah.
Thank you.
Thanks, guys.
Thank you,
So we'll now
Jaroslav.
move on to the next pitching startup, Demand Trading.
Yes, good morning, everyone. Let me just take a second to
Morning.
share my screen.
All right, when you're ready.
Yeah, you can see it, right?
Yeah.
Perfect. Great. So we were shocked to hear that many fund managers still rebalance their portfolios manually. So I'm Damien from Dema Trading, and we are going to solve exactly that problem. So the rebalancing process, the process of adjusting the portfolio frequently to maintain your intended asset distribution, typically is a very slow, expensive, and inefficient process. So there's at least 5,000 euros in unnecessary monthly expenses because trading is done manually, inefficient, and unpredictable. The process typically is not auditable because approval and communications are lost in private email inboxes. Typically, the rebalance takes at least 15 tedious man hours, and that's because all the steps are done manually and they are key person dependent. Lastly, there's no accountability. There is an absence of reporting and analytics, and it means there's no insight into the efficiency. With our portal, rebalancing is a fraction of the cost and it improves your fund performance. So for one of our clients, we've reduced the tracking error from index to fund with about 70%. And that's because our portal optimizes the tracking error, the fees, and settlements. There's a single source of truth, so you can see who did what exactly, what the current status is, and what the next steps are in the process. There's 1 hour per rebalance because the approval flows, asset transfers, trading, and reporting are handled for you in our portal. And there's full responsibility because there's comprehensive reporting and analytics without any effort. Currently, we're at the forefront of exponential market growth. So as you can see here, the crypto asset management market is expected to keep growing exponentially and growing to over 3,000 million US dollars by 2030. According to institutions, we're going to keep growing exponentially, and the investors are going to exponentially invest more over time. So according to the Coinbase study from 2023, nearly 60% of the respondents indicated that they will increase their crypto allocations over the next 3 years, with no current investors expecting to decrease their allocation. According to the EY Parthenon research, institutions overwhelmingly believe in long-term benefits of crypto and digital assets, and 60% of their respondents indicated that they allocate more than 1% of their portfolio to digital assets and related products. And lastly, according to Fidelity, up to 65% of their institutional investors plan to buy or invest in digital assets in the future, and over 50% agree that the asset class is here for the long term. Compared to the competition, we're the only company that is active in digital assets that can help you to decrease the tracking error of your fund, that can help you with drift calculation, meaning adjusting for market movements as we're trading. We offer a full trading engine, and we're the only company offering a full end-to-end rebalancing process facilitated through our portal. If you look at our portal, it's very easy to manage multiple funds. So you get a complete overview of the funds that you have. You can add a fund very easily and set key alerts by just simply filling in the information and setting which alerts you want to receive and how. You can control your liquidity sources and custodians, so you have full control over which companies you work with and which you don't. And lastly, you can add a rebalance with one simple click by simply filling in the asset allocation that you want to have, or let us pre-fill all the data for you if we have an integration with your index or data provider. We charge a fixed fee of about 600 euros of license fee monthly. And in addition, we charge 1 to 10 basis points on the traded volume for our clients. So as I said, I'm Damien. I take care of the commercial side. I have mostly commercial background, but also a bit technical and in algorithmic trading. And my co-founder has a background both in AI and in software development. And we already signed multiple partners and customers, such as Finter, Apex, Crypto Finance, but also market factor indexes from Vanek. And we have multiple angels on board that come from trading firms, big tech firms, and other relevant institutes that can bring experience. We want to raise 1 million, and of that, 250,000 is committed. We want to use those funds to hire 2 developers, a sales guy, two salespeople, 1 marketeer, 1 cost position for legal and operations, and for marketing and events and event attendance. With the funds, we want to build the web portal from the demo that I just showed you, onboard the next 30 customers, and prepare our scalable go-to-market strategy to further expand in the market. If you're interested in changing the role of digital asset management with us, reach out to me either through the QR code that brings you to my LinkedIn or through email, and I'd love to have a chat with you. Thank you.
Thanks, Damian. Now we'll move on to the Q&A. Just can get you to unmute.
Thanks, Damian. I wonder, have you actually thought about like what is the market like if your business model is around like 600 subscription fee, what is like the realistic market you can penetrate? I mean, like, because digital asset management is it's not a mass market, I would say. So what are your yeah, I think a lot of them there will be coming, but you also have competitors as well. So what is your like estimation for, I don't know, like 2 years of operations, how many digital asset managers you might be able to onboard and retain?
So the goal is essentially to, within 1.5 to 2 year period, onboard about 30 customers. Of course, because we also have a variable fee, it's an estimation of the revenue, but we expect to capture about 100K in monthly recurring revenue from those 30 customers. So that's like the 600 in license fee, and depending on the client size, between 2 to 4K on average from the trading fees, which is basically only a couple of million in funds, which is not very excessive for a fund, I would say. And although I agree that the current fund market is not insanely big, I think we can make a very good use case that the market is going to be very big, and that we should expand while we're still at the beginning of the cycle. Because as you're probably aware, MiCAR is going to kick in for every business. The US is looking to approve Ethereum, and I'm pretty sure more assets are going to follow. So we're really at the early stage of multi-asset funds emerging, and I think we should capture that before it's a fully mature market.
So, so is your plan actually to target kind of these new emerging firms and just give them this easy tech to start managing all this stuff? I mean, like all those people like in Telegram groups managing other people's money, or do you plan to expand and, you know, like cater to more I would say well-established institutions?
Yeah, so we're only B2B, right? So we don't facilitate any kind of Telegram group. That's very unlikely. But the idea is to have a charging model that works from very small funds to very big ones. So the license fee is made so in such a way that if you're a small fund, it's perfectly fine to pay about 600 in fees. But as the fund grows or it becomes or is bigger, you start to pay more in trading fee. But at any size of the fund, you should be able to have a very good return on investment. So we're going for the small funds because it's just easier to get them on board. It takes less calls. It's not really enterprise sales. With a portal, we can let them self-onboard and do marketing campaigns. At the same time, we're also chasing a couple of enterprise clients, right? So we have Apex Group and Crypto Finance in our portfolio, 2 very big names in the space. And those are really good for branding purposes. So I would say a couple of enterprise specifically for branding, and then the small funds also to become sticky, catch them early, and help them scale.
Thank you.
Thanks, Damien, for the explanation, and congratulations on the partners that you signed already and customers. I think some nice, well-known names there. When do you expect to go live?
So we're pretty dependent on funding for that right now. If we raise the funding round, the first version of the portal should be up in about 2 to 3 months.
And do you have so like with the companies there or with the fundraising, do you think you will succeed anytime soon with the fundraise, or is it difficult currently?
So we actually started the whole fundraising outreach process last week, and we've had multiple VCs book meetings with us that are interested and that align with our scope and interest. We've had some first meetings, they were interested, and there's a follow-up plan with those as well. I'm not sure how fast it would be, but we're actually hoping that we can close August, September if possible.
Okay, thanks.
All right. Just want to check if there are any other questions. All right. Thanks so much, Damien.
Awesome. Thank you.
Yep.
Thanks.
Thank you. So we'll move on to Stable Jack now.
Hello, everyone. Can you hear me well?
Yeah. Hi, Sisa.
Hey, Melissa. I shared my screen. I hope you can see it as well.
Yep.
Great. Okay, then I can start.
Yeah, whenever you're ready.
Yeah, it is Caesar. I am one of the co-founders of StableJack. And what is StableJack? We are building a yield and volatility trading platform for any asset that you can think of. It includes cryptocurrencies, commodities, etc., any asset that you can think. So, why we are building such a thing? First of all, yield products are not accessible to individual people. We have a couple of products in the ecosystem, but other than that, there is a limitation. And also, even though for now we have good yields in the DeFi ecosystem, we don't have superior yields up, let's say 20% yield, etc. So this is also a limitation. And most of the yield products have the risk of losing your principal. For example, in Pendle, if you choose the yield token, you will lose your principal. So this is a problem. And also the duration mismatch problems can create losses for the fund managers as well. And we are solving actually all of these problems. And why we are building this product and this market? Because in traditional finance, the numbers are counted with trillions. So this is a huge market, and the tokenization and yield market on the ecosystem is growing, and it is only a couple of billions. So the growth is there, and it will be happen in the near future. So we want to be part of this growth process. So what we are building, basically, we are receiving any collateral that the protocol allows, and in return, we are creating two tokens. The one is the volatility token, and the second one is the yield token. What the protocol does is that we are exchanging the volatility and yield into two products. So let me explain them separately. The yield token, which gets all of the yield from the collateral, and it is tokenized as a stable coin, so it can be used in DeFi protocols. The users who hold this are giving up on the volatility. Let's say you have BTC and you choose yield token, you are not getting the volatility, but you are getting the yield. So this is important, and you are getting leverage yield returns, and you are not losing your principal. If you redeem the asset, you can just get your BTC and leave the protocol. And since this token will be utilized in DeFi, it's capital efficient. For the volatility token, those people who give up on the yield, but they are exposed to the leverage collateral for the asset. So this will allow leverage position and leverage exposure to asset. And there is no liquidation, there is no funding fee, and it can be used in DeFi. So it's also increasing the capital efficiency. What are the competitive advantages? First of all, for the yield token, we have superior yields, and yields can be paid in any assets like BTC, ETH. It depends on the collateral. So when you have the yield token, you can use it as collateral in DeFi products, and there is no expiry date, and the principal is protected. For the volatility token, you can have a leverage position for any asset. It can be gold, Bitcoin, AVAX, Nvidia stock, and there is no liquidation risk. So this is important. And also, there is no funding fee. There is no, again, any expiry date. And since this is a token and like it has no connection with spot price, there is no duration mismatch risk. So what is our roadmap? Today, actually, we are launching the protocol on Avalanche, and AVAX will be our first collateral, and we will have two tokens, AUSD, the yield token, XAVAX, the leverage token. XAVAX will have a leverage exposure to AVAX price, while AUSD will earn AVAX yield, which will be around 15%. And then we will add Bitcoin and Ethereum as collateral, and then yield-bearing stable coins will be added as collateral as well. After that, we can also expand our collaterals into gold, silver, T-bills, Eurobonds. This will continue as well. Like after that, we will have a lending market liquidity version to forks to increase the capital efficiency of those assets to be utilized. And then we will focus on traditional finance and integrate US stocks, international stocks. We are also currently talking with some banks in Turkey to have such a product available. Our business model is very simple. We are getting commission revenue from the yield and also minting and redemption fees. Until now, we have raised 1.1 million USD, and we are again raising the same amount with Safe Plus token warrant. Also, we are currently in talks with Avalanche and Avalanche Foundation. These are two separate entities. Avalanche will provide incentives us within the end of this month to further incentivize the protocol, while Avalanche Foundation will provide us liquidity, like as part of their liquidity commitment program, they will provide us liquidity. Very shortly, we are a team based in Turkey. We know each other for a very long time, and actually we are specified in the yield and stable coin markets. And for example, we have also moderators and speakers at the Unstable Summit in Istanbul, and like we are very expert in this area. And I think the time is running out. So thank you so much. If you have any questions, happy to answer.
Thanks so much, Cesar.
Thank you, Cesar. Yeah, I actually have one. I think of myself, I tend to think of myself of being kind of an expert in DeFi, but to be honest, I don't get your model. To the end, at this point, it's because I'm not an expert, obviously. Right now, I get that. So please explain to me how that volatility token, if I get it right, that token essentially allows user to kind of capture gains from the volatility, but as we know, volatility goes both ways.
Yes.
And I understand that concept until the moment when you say it can use as a collateral in DeFi. So if it used like that, I assume there should be some oracle that actually defines the price of the asset in the collateral pool at the moment. So if it's a volatility token, how does that work?
Like, let me give an example. In case like you have $100 worth of AVAX in your at your reserve, and $50 worth of X AVAX has been mint. So when the AVAX price rises like let's say 10%, the X AVAX price will possibly rise around 20%. And actually the protocol directly determines the price of the leverage token, because like you have the asset and there is a formula behind it, how to divide the volatility and yield. And when the price of the collateral changes, the protocol directly calculates the net asset value of both the yield token and volatility token, and it directly reflects the price to the volatility token and also the yield token. And like because of that, the price is changing like similar to a token. And like it can be, again, will be available to be used in DeFi because of that. And actually, like we have some partners today that we are going to launch. So like there is no specific problem with that.
No, I mean, but the thing is that if it's a volatility token and you say that the AVAX price goes by 5% and the volatility token price changes by 20 because it's leverage, right?
Yeah.
So if I use it as a collateral and say AVAX goes down 25%, which is not a shock, right? It happened a few days ago. Like it went down 30% in a few hours. What happens to my collateral?
Your collateral value, basically your collateral value will decrease exponentially compared to the AVAX price. And like if you have like a position using XAVAX as collateral, you may be liquidated. This is the nature of this product. But the good part about is that compared to, for example, Binance perpetual contract, you have a liquid asset, you won't get liquidated, and you don't pay a funding fee, which is around 20% yearly. So it is way cheaper to have this position.
Sorry, but how is that I'm not getting liquidated? How does it work?
Like, since it is just a token, in the worst case scenario, its price can go to zero, like literally zero. And in that worst case scenario, like you still have the token. Like like in an exchange, for example, if you have a contract, like your contract will be closed and you lose your money. But in our case, you have the token, and if the AVAX price regain its value, your token will regain its value as well. But like to prevent such a thing to happen, we have security mechanisms that we work with risk management in the risk management area. So like this is a thing that like we are not expecting to happen in the future, because that kind of a price action has never happened before.
Okay, thank you. I still need to dive deeper. I'll ask more questions later on.
Sure.
Thank you.
Thanks so much.
Sure, I'll have 5 minutes. Is the unique feature here of the business model also because you don't talk about any competitors, the fact you split the volatility and the yield token?
Yeah, actually, like there are competitors, mostly like we see Pendle as a competitor, FX protocol as a competitor. Like these are the protocols that devise the yield of and volatility of the collateral and utilize different tokens products. So these are the major competitors for us. But we are starting on Avalanche, and on Avalanche there is no competitor, like literally no competitor. So we have an open space to grow.
Okay. And do you expect that if I look also at the budget wise, like I expect you need to make a lot of room to get some scale. So marketing wise, I would expect that you need to spend some more money than this.
Yeah, we will possibly spend more money on marketing, but we have great partners: Banky, YieldYek, Trader Joe, Delta Prime, Pangolin. These are comprised 80 or 90% of the TVL on Avalanche. So like we also have their distribution channels available to us.
All right. Thank you for your answer. Clear.
Thank you so much.
Thanks very much, guys.
Yeah,
Thanks,
thank
Lisa. Yeah, so next up would be Gear Chain. Hi, Harry. Can I get you to turn on your camera as well?
Yeah, do you see my screen?
Yeah, fantastic.
Okay, awesome.
All right, you can start when you're ready.
Okay. Yeah, thanks so much for having me. I'm Harry, CEO and co-founder of GearChain. As our name suggests, GearChain is built for blockchain. We are creating an inventory asset tracking platform powered by Web3. So businesses lose trillions of dollars annually due to inaccuracy. And 43% of business in the United States still use a paper trail. And 60% globally rely on spreadsheet for inventory management. These methods are slow, error-prone, and lack scalability. And implementing ERP system is not helping, with 75% project failing due to their limitations and significant learning curves. So our solution syncs spreadsheet with a customizable, user-friendly app. It eliminates errors with real-time information on the go. Our app is 11 times faster than manual processes, saving up to 90% in time and costs. It's accurate, easy to use, and totally customizable. So GearChain is an AI native mobile app that transforms your phone into an IoT device with a built-in barcode scanner. Our app-powered real-time inventory management offers insight and forecasting to your data. Blockchain works behind the scene. ensures traceable, immutable transactions, and visualize asset and create a transparent supply chain with the origin trails. As you can see in this video, building a custom app for inventory tracking is easy, and inventory audit job can be done pretty quickly. So our main supply chain use case focuses on interoperability and transparency for tracking moving assets. Our use case extends to DePIN, decentralized physical infrastructure network, and RWA, real-world asset tokenization. So it tokenizes physical assets, enabling fractional trading or use them as a collateral. Our blockchain, features are opt-in, enabled for self-notarized process, enhancing trust and transparency with your stakeholders. So we started with a barcode scanner prototype for Google Seed, and expanded with AI, ML, and blockchain. And now we have over 30,000 K users with 87K ARR last year. We secured funding from the Silicon Valley-based Mar Fund, and now accelerated by BFG for Web3. We recently received a grant from Google. It was last week. So it highlights our innovative approach, and they see the market potential. Our customers say that the opt-in blockchain feature will attract company adoption, in inventory management. So our goal is to reach 20K MRR by end of year, and 1 million ARR by 2026. And we are targeting the $20 billion inventory management software market for SMBs, projected to reach $30 billion by 2028. Our serviceable obtainer market sum in the US is $1 billion, and we are focusing on the asset tracking segment. So in the competitive landscape, our competitors fail to address users' real pain points. We offer a superior solution for small and medium businesses, aligning perfectly with their needs. So we are very well positioned to adapt to upcoming changes in barcode technology and also compliance. Our business model is a B2B SaaS subscription with a pay-as-go in a purchase, and also a hardware bundle. Our Pro Plus features encourage users to upgrade. So our team has over 50 years of IT experience. I'm full-timer with a background in SCM, SaaS, and blockchain. My co-founder, Bona, UC Berkeley graduate, she handles all the visual design. Our mentor, Shailesh, LinkedIn principal product manager, advisors on product and business clarity. And we are supported by Google, Microsoft, Mar Accelerator, BFG, and Score Silicon Valley. So our app saves time, works faster, and is more accurate. It can reconcile inventory with hundreds of thousands of items in a matter of hours instead of a matter of days. And these are some of our users' feedback. And we have customers waiting for the product launch, and now we have 16 letters of intent. So we are raising 200K in safe funding. Most will be invested in product and business development, with a remainder for the day-to-day operations. This funding will help us reach 1 million ARR by 2026. Yeah, and this is our YouTube video, so you can check more demos. So I'm happy to answer any questions. Thank you.
Thanks so much, Harry. So now we'll move on to the Q&A from Yaroslav and Martin.
Oh, go ahead, Yaroslav.
No, Martin, please, that's your turn to start the questions.
Oh, okay, thanks. Thanks for the explanation. With the tracking, are you also thinking to attach other data like ESG data, something around sustainability? Or is that not the case here?
What data? I think I lost
Data
you.
on sustainability or on ESG or?
Yes, so we didn't launch the token yet. If I understand correctly, you're talking about the tokenomics, right?
No, more that if you track the data and you look at the inventory, I see that a lot of the companies also need to provide data about ESG sustainability along the value chain. So if you are part of the value chain and you're checking already the inventory with the blockchain, I could imagine that you also add some data from those kind of sources.
Yes. So basically, we are starting with a very small handy tool for the asset inventory. And then, of course, it can be integrated with the ERP system through the API, for the Google and Excel API. And we use Algorand, blockchain, which is very stable. And so it's very fast with the near zero gas fee and also highly secured. So yeah, so this immutable record can be quickly portable through the public ledger.
Okay. I expect almost all clients will have directly an enterprise client or a contract because like with the free Pro Plus, you're quite fast out of options.
Yes, so some big customers, of course, especially when they need to do the audit for their production manufacturing companies, right? But we are more focusing on the SMB, at this stage, in the retail cosmetic sector as our first niche. And then, of course, this horizontal product can be expanded to different niches, and we would need to pivot ourselves as we grow.
Okay. And my last question is maybe more also on the side of the budget. So you're raising 100 to 200K dollar. Then you mentioned we can then reach by the end of 2026 1 million.
Yeah.
Sounds quite cheap. A lot of months to cover.
Yeah. Yes. So we are already making money. Okay. And I myself, also developer. I write the code on this mobile application. I also have two other guys in the development team. So they are assisting me. And Bona is not getting any pay. She's a kind of a dedicated. I'm dedicated, fully dedicated to this project. So we are raising 200K for the and I would say we still have a runway more than 12 months.
Okay, thanks.
Thank you, Ari, for the pitch. I'm not a big expert in supply chain and all this stuff, but I have a friend who's been building a supply chain Web3 startup since 2017. And they've had their successes and failures. And the main problem he says they've bumped into is that the whole industry is very obsolete and it's a big problem. Even if they have a great innovative solution with blockchain. They've pivoted a few times, creating really a nice product that everyone likes. The problem is that they can only tap into the small clients niche, because as they try to sign up any big company, really big company, because that's where the money is for projects like that. They get into the problem that it's something new for the whole staff, and it's like you need to educate thousands of people to start using something they're not used to. Then you need to license your solution to be like corporate grade, license, security, all that stuff that also leads to the need to invest a lot into licensing, standardization, and things like that. Have you thought about those problems? And maybe you already talked to large retailers or warehouse operators about how you will tackle those problems of growth, because obviously you need to get into those multi-billion corporation place to really succeed.
Yes, that's a great question. Yeah, I'm thinking about that problem all the time. And that's the biggest problem that entire supply chain industry are facing, because you see hyperledger, and mostly they are dealing with the silo data, and they try to solve with the private blockchain, but you see, private blockchain is another siloed data. Nobody trusts, right? Nobody want to jump into your ecosystem. So that's why we are approaching with a totally different approach out of the box. And the idea is we want to offer them as easy as possible. So you don't need to invest anything. You don't have to develop anything. You just need to enable within this dApp. And then once you enable, you have a total transparency on your supply chain with the last mile. And you can also invite your stakeholders like your vendors, distributors into your project, and you can share your inventory level with them. It's like, it's similar to vendor managed inventory approach. So that way they can join, to your project. They see your inventory level, and you can build a relationship with them. You boost collaboration, right? And then down the road, you can request to your vendor that, hey, can you prove this item is genuine? So it's a kind of a real item from origin, right? And they have no reason to refuse, right? Because they can also forecast for the production, and they can, yes, this is a genuine product, very expensive skincare product or Rolex, right? Everybody want to, kind of have a verification certification. So we can kind of smoothly build in within blockchain. Yeah.
Thanks so much, Harry. And thanks so much for the questions. So now we have to move on to the next team. If you do have any follow-up questions, you can always email Harry. You can email him through me. So that would be. So yeah, now we'll move on to the next team, Bion, presented by Nilesh.
Yeah, hi.
Nilesh, when you're ready.
Yeah, I'm ready. Yeah, thanks. Yeah, hi everyone. I'm Nilesh Lalwani. I am founder and CEO of Bion. So Bion is a shopping application where users can shop with the listed brands, and they can make payments and avail credit facility. So we are solving a very big problem here on the lines of payments and cashbacks in the market. So if you see in the market, if you are shopping anything and the cashbacks that you get, that is the fiat cashbacks. You don't have appreciation in the value, or you are not able to encash that in time, and there are delayed cashbacks given by the platforms. And on the other side, if you see on the payment side, there's no direct option as to shop online with any of the listed brands, top rated brands. You cannot shop with crypto. That's a bigger problem. And then you have scattered options like you have to buy the vouchers or use some expensive cards and other things to shop. So, we're coming with a solution where you can avail cashback and payments instantly. So we are live with a cashback side, where live with 100 plus brands, where you can earn cashbacks up to 20% in crypto. And we're live with BTC, Ethereum, USDT. And also on the payment side, we are going to work next, where you will be able to make the payments and you'll be having an in-app wallet. So we are building a crypto payment solution where will be having customer users will be having a cashless features, and any payment that they make, it would be rewarding them. And also, so the process is very simple. They need to download the app, shop, and then make the payment, earn rewards, and redeem it, stake it. So it's a huge market actually. So if you see here, there are the whole e-commerce market itself is around $2,000 billion. And on that, there's no defined market on the crypto side. So we have made our own version of having it's a 70 billion market that we see. Sorry. Yeah. So we have a huge opportunity also on the user side. So the whole crypto market, there are users of around 420 million users. So that's the stats we worked out, and we could see that the major concentration is towards the Africa and Asia region, where most of the users are there. So that's the focus of Bion. So we are live in Play Store and Telegram as of now. So you can download our application. You can also use our bot in Telegram, and these are the brands that are available in the application, and few snapshots of our product. So we are live with few. We are already we received grants from few the chains here, Ton, Stellar, and also we are part of the accelerators, Ton, Algor, and T-Hub, Blockchain Founders Group, Foundership. And our revenue model is very simple. So anybody customer who shops through our application, we receive a commission out of that. The commission ranges from 1% to 30-40%. And also we have other means of making money within the application from merchants fee, vouchers, commissions, platform fee, and other things. So we do have a competition. So there are platforms who are providing crypto cashbacks, they're providing wallet services, but we have more than that in terms of giving the payment services as well. And also we'll have our own token where it will have multiple utilities in the application. So on the lines of roadmap, so we have achieved what we laid down for Q1 and Q2, we are almost closing it. And so now next is now we are raising seed round, and then we also made our app live in Telegram as well, mini app. And going forward, we would see that we are forging more into the AI space and also with the Bion credit that is on the lending side. So the token will have multiple utility, can be used as payment, can be used as rewards. We will have a membership tiered model with 4 tiered membership where customer need to stake the tokens in order to earn more rewards, be eligible for payments, and avail credit facility. So few things on the tokenomics side. So we do have a wide distribution on the tokenomics, and this is the recent raised round. We raised 100K from few angels, from Ramani Ram from Router, Vijay from BitsCrunch, Ash from Push Protocol. So we are raising seed round right now, and it's at 10 million FDV. So myself, so it is a team, and myself, so I come from a lending background. I used to provide a small ticket size loans with my previous startup, and did a disbursement of $3 million of small ticket size of $50, $100 like that throughout India. And we build the whole credit engine right from how much money has to be given to the user, and making partnership with the banks and NBFCs and everyone. So we have Sangeet who is there in the call. He is the CTO, and we have a few people from the core team on the marketing and operation side. So we have Vijay, who is our advisor. A few partnerships we have made recently with Ton, Algorand, Router Protocol, Push Protocol, Bioeconomy. And yeah, so this is about us. So altogether, we are building a DeFi shopping application, where an integrated shopping application where users will have cashbacks, payments, and credit facility. The three key elements for shopping would be available for the users going forward. Yeah.
All right, thanks so much, Nilesh.
Thank you.
Yeah, now we'll move on to Q&A. Feel free to start.
Yeah, thank you, Nilesh. Did I get it right that this is a standalone app, so the user needs to get it on their phone to be able to use it?
Yes, so they need to download our application from Play Store, App Store, and also they can use it from the Telegram bot also.
Okay, and if I download it as an app, I have a wallet there. So in order to start kind of shopping through the app, I need to top up the new address, or I can import my current wallet.
So right now it's the cashback only, which is live, and shortly we are going to have an in-app wallet where every user who signs up in our application, automatic wallet will be there for him. So if suppose when we go with the payments, when we go live with payments, so user needs to top up his wallet available in the application from an external wallet. He needs to transfer the tokens, and then he can use it to shop online. Also,
okay, so yeah. Yeah, go ahead, please.
And also on the other side, if you see, we are providing crypto rewards. So over the period of time, when he accumulates multiple crypto rewards and he has substantial value, he can use that also to make the payment with the branch here.
Okay. So do you see this as a kind of a user acquisition problem, like getting users install yet another application, use yet another wallet, and actually move their shopping habits to the new application instead? I mean, like leave Amazon or whatever these people are using. How do you plan to actually make people get yet another app, yet another wallet, and change their shopping habits?
So if you look at the market right now, so users are not getting any rewards from whichever application they shop. For example, if you shop with Adidas, Puma, Nike, or Amazon, you just normally make the payment in fiat and that's it. So, but here the case is different. So we are, for every shopping that you make, we are providing you rewards from 1% to 20%. So that's a huge advantage for a user to shop with us. Even if you want to shop with Amazon, Adidas, Puma, or anything, from our application you can use, and we receive commission from those guys, and those commissions are again distributed with the users. So that's the track we have here. So that's the reason why, one of the key reasons why users will shop. The other reason is the crypto users. The crypto users don't have much bandwidth to use their crypto to shop online. They have to go to the OTC market, convert that to fiat, or do a lot of things. So we now, in our application only, since we have all the brand listed, in our application only, we are building a solution where your crypto will be utilized to make the payment with the brands. So these are the two key things where users will download our app. One is cashback, second is on the payments.
Okay, thank you.
You show some logos with product there, or many logos. What is the take if you interview those kind of clients about the solution?
So we have 100 plus brands, and we are also onboarding another 200 plus brands in another 1.5 months time. And so these are typically we have done partnerships with the third-party agencies to onboard these brands, and through them it's all API integrated with our application, and so that's how these are onboarded. So we have a network worldwide, and shortly. Right now it's live in India, but we are taking it to 15 plus countries in next 1 month. And so in terms of merchant onboarding and having these brands, it's not a challenge for us because we have that connections of third parties who are assisting us to onboard these brands. Even without having direct connection with the brands, we can still manage with the users going to the platform and shopping through our application.
And do you have already a bit of more insights in the revenue model? So you mentioned that there will be a percentage of the sale from the merchant as a commission, but will not be a big sum, I expect.
It will be.
Volume.
So it varies product to product. So for example, for furniture or wellness, we have a commission of ranging from 15 to 25%. And for electronic items like laptops, mobiles, we have a commission 5 to 7%. So it varies depending on the merchant to merchant, product to product. So that's how the but for every sales that is happening through Bion with the merchant, with the brands, mandatorily, compulsorily, we will be receiving commission. And commissions are not pennies; it's a good percentage. And 50 to 80% of that commission will be passed on to the users. So our application is live. And right now it's 50%, but based on the membership tier the user is in, he will receive more when he's in the top tier. He receives more cashbacks, up to 80%. Yeah.
Thanks.
All right. Thanks so much for that, Nilesh. Martin, do you have one more question for the team?
No, I don't. Thank you.
Okay, cool. Thanks, Nilesh, for the presentation. Now, next we'll move on to Mika Pass.
Hello. Okay, so my name is Justas. Do you see the presentation?
Yep.
Okay, so my name is Justas, and together with me is Gintarė. She's a CEO. I'm a CMO of MikaPass, and we are creating anti-money laundering solution, compliance solution for DeFi market. And I know what you might think. It's like crypto and compliance is like fire and water, not exciting, but for us, it's exciting and full of opportunities. So why are we doing this? Basically, it's 3 pillars. One of them is, of course, regulations. Some of the guys here already talked about MiCA, other regulations. So as you probably know, it's pretty much enforced in full force next year. Second thing, as you probably also read in the news, is some people are going to jail, some people who never thought they will because they are developers and they are doing things, you know, and they are untouchable, but that's not true. As you probably know, Tornado Cash developer got 4 years in jail. And third thing is, of course, that the current anti-money laundering solutions are not ready for Web3. It's a different game. So as we see it, it was a wild, wild west, and it's going to different direction, and we're here to capitalize on that. So our solution is kind of built for this shift, and it's planned to grow together with the shift, our product. So what we can offer is like one-stop solution for all your compliance problems. So we combine different things like crypto ML, so we can screen your wallet, KYC ML, so we can screen a person, are you in sanctioned list or not? Of course, we can do continuous KYC ML, which means it's not one time as it's now. And of course, we can do compliance on chain, which is not usual compliance as in fintech. So we are kind of designed our product based like that the shift is happening. And we got some traction already. We have 2 clients locked and they're paying. We have 9 negotiations, and I think there's more in the funnel, and 28 in discussions. Of course, we got some recognition in winning some startups and other festivals, but traction, of course, is more important. So how it works? Basically, as I call it, it's like a bouncer in the crypto nightclub who can see. So our Mika Pass can check your data, like for example, screen your wallet and get the risk score, or screen your face to see are you in the sanctioned list or not, without actually kind of seeing you and without putting any your data in a sensitive place. So it works as a blind gatekeeper who checks, are you a good person or not? And if you're not a good person, we are not letting you in. And if you're a good person, come on and trade your Pepe or whatever you want. So that's our technology. And of course, there are many competitors. Some of them are more in the KYC part. Some of them are more in crypto wallet screening part. We're combining these things, and none of the competitors can offer combined on-chain and ongoing compliance check. So we have a pretty strong edge here. And of course, we're playing in, as you probably also know, in a very huge and very fast-growing market. Some say it's growing much faster than AI, but nobody talks so much about it. So we believe and we are confident that together with this compliance regulations and all these sorts of things, the market will be huge for us as well. And who are we? Me, Justas. I was working in fintech from around 2015, launching some peer-to-peer lending platforms here in Lithuania. And Gintarė has a long history in digital identity, and also building mixers and other blockchain projects. And we already did our POC, we did our MVP, we onboarded first users with our MVP, business and end users. And we are ready to get bigger and get stronger in here. So we are raising 1.3 million. Of course, our focus solely now is sales. So to onboard as many businesses as possible and not to leave R&D behind. We have our plan how to get our product stronger and with even more competition advantages. So yeah, that's us. I hope you got it right. Thanks.
Thanks so much, Justas. You actually do have about a minute left, but it's okay. We'll move on to the judges now for the Q&A. Feel free to unmute yourselves,
Yep.
Martin, please.
Yeah, thanks for the explanation. I like the name as well. I think you get some good attention there.
That was the plan.
Sorry?
That was the plan.
Yeah. No, I can see that. As working for a traditional bank, I can see this as a problem that we are facing. You are mainly focusing on the story also Web3. Can you see also that you are going to do this for maybe tokenized assets or other assets that there is, or is it first focus on the Web3 world?
I think we are now seeing that so many virtual asset providers are addressing us. They need to solve many compliance problems. Of course, our focus is on-chain solution, DeFi, but we're seeing that we can also find a solution like to solve travel rules, for example. So, of course, real-world assets are also on our focus because they also need compliance, and we can find solution for them as well. If I heard you correctly.
Mm-hmm. Yeah, exactly. And how do you work together with those big companies that also assess kind of data? Because if you take this as a, like we as ABN AMRO, if you would like to have something like this, it's quite a liability that you take on to say that you can do it right.
That's the beauty of it. We don't take any liability. We are a technical solution. We are in between. So we're not actually screening the wallets. Chain analysis, core chain, or whatever provider you want or I want, you can do that. We do not also do KYC. We have some partners in Ondata, for example, at the moment, but we can choose any other. For example, you don't like Ondata because you don't know them. You want somebody else reliable. So we can onboard them and you can work with them through us. So it's basically technical solution combining proofs. And one of the proofs are KYC.
All right, thank you. No other questions.
Another from my side, thank you. Everything's clear.
Thanks. Thank you, guys. See you.
Awesome. Great job, Mika Pass. So yeah, actually, we are pretty much going to wrap the session here because the final team ChainGap will not be able to make it for today's pitch session. So I really just wanted to, extend a big thank you to both Yaroslav and Martin for joining us today. And, just sitting through all those 8 pitches and, being attentive and asking great questions for each one. I will go ahead and share my screen, just some quick last minute things to wrap up. So yeah, just checking you guys can see my screen. Awesome. So you've just seen all the startups from our season 5 cohort. And we are Blockchain Founders Group. For those who joined us not too long ago, we are a Web3 accelerator, and we pretty much look at startups from almost all verticals. So the ones that you've just seen are part of our latest cohort, season 5. And we do 2 cohorts a year, so we are excited to announce that season 6 will be happening at the end of the year. And we just want you guys, if you're interested, to look out for the application phase that will start sometime in August to September. So it's an 8-week program, for Web3 startups who already have some sort of an idea or MVP going. And we're just here to accelerate that and work on that with you. So yeah. Just some final notes from me. So this entire session has been live streamed on YouTube. So if you'd like to go back and take a look at it, replay, feel free. The link will be sent to you after the event as well. Feel free to join our newsletter for any updates on the program, startups, what we're up to as well. And you can also scan the QR code to look at our entire portfolio of startups that we've invested in, we've worked on, and all that. So yeah, just gonna close the session here. Thank you all for spending your mornings with us. And yeah, here you go. Bye-bye.
Thank you, everyone. Bye-bye.
Thanks for all the nice pictures.
Thank you. Bye-bye.